from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Caroline Hyde in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, 5G-equipped smartphones, they're due to double next year, and demand for Teslas are expected to ramp up. But with an ongoing chip crisis and shrinking supply chain, can companies keep up? We're taking a look at the chip makers' role over the coming months and years. Plus, high-tech diamonds. We're speaking with the CEO and founder of Diamond Standard on how they're utilizing the blockchain to trade the world's only regulator-approved diamond commodity. And some news surrounding their Bitcarbon coin. And the growing digital design space. We'll hear from the CEO of Minted. She's a serial entrepreneur, Mariam Nafisi, on how her company's gone from an office in an attic to mainstream success. All that ahead. But first, let's look at some of the biggest movers in the markets today. Kriti Gupta, you've got more on another day in the green.
Absolutely, Caroline. A risk-on day when it comes to the stock market. You saw the S&P 500 end in the green, and this time it wasn't big tech necessarily outperforming. You didn't see that trade. In fact, one of the laggards in a broadly risk-on day was the biotech index, the one that's been doing so well earlier in the week. Today, they underperformed. But if you need just more evidence that it was, in fact, a risk-on day, Caroline, some money coming out of treasuries as well to the tune of 6 basis points. But at the end of the day, all the action was in the crypto market, and it hasn't stopped yet. We all started off with some Bloomberg reporting by our colleagues Katie Greifeld, Vildana Hyrick, and Ben Bain over on our print side. They came out and said that Bitcoin is rallying after Bloomberg reported that the SEC is unlikely to block a Bitcoin futures ETF. So naturally, you saw that big jump in open interest, and that's really where you're seeing that spike today. I mean, just take a look at that comparing to the spike that you saw earlier in 2020 and earlier this year. Some pretty strong action when it comes to the crypto markets. I want to end, though, and really talk about one of the next pieces of the market, which is, of course, going to be those shipping rates. And that we're talking about inflation concerns. We're talking about supply chain concerns. Well, I really want to show you that even though we've had this massive run up in shipping rates, they are off their peak. But on a seasonality basis, they are still extremely elevated. That's going to likely be the conversation that dominates the markets as we go into more and more earnings over the next couple of weeks, Caroline.
Kriti, thank you. As we brace ourselves for those earnings, we continue to think about how much supply chain is going to be mentioned. I think supply chain was mentioned some more than 3,000 times already in analyst calls. And one analyst is actually saying that we just haven't made enough progress when it comes to, in particular, the chip supply. I want to bring in Futurum research founder and principal analyst, Dan Newman. Great to have some time with you, Dan. And over at Futurum, you're really trying to analyze whether enough has been done, what can be seen in the next couple of months, for example. Like, let's keep it short time frame, here until the holidays. What are we going to see in terms of the high-end goods, the phones, the electronic equipment that we want to buy?
Yeah, the holidays are going to be a very interesting time because all the solutions that are being thrown out there are longer terms. Of course, we can open the ports 24 hours, and we can try to streamline, maybe raise wages a little bit to try to get more people behind the wheels of trucks, more people, moving the containers down on the trains from the ports. But overall, this is a problem, especially the chip-related challenge, is going to take multiple years, and nobody wants to hear that. So you're seeing different actions taken. Best Buy, for instance, actually came out with a new shopper program. They're calling it an exclusive shopper program, and they want to charge around $200 a year. And what they're going to do is give shoppers access to harder to get technology devices. So this is a clever move by some retailers now to try to get higher priority shoppers to spend a little bit more. And it's a little different than, say, the automotive industry, where people are legitimately walking in and paying 10 and 20% over list price just to purchase an automobile that they desire. So it's a very interesting time right now because the holidays are coming, and it's very unlikely we're going to have this problem solved by then.
Inflationary pressures, clear. Dan, I'm interested in that you say a lot of these are longer term. This whole onshoring debate, whether or not we should have fabs here in the United States. It's notable that the reporting that Mark Gurman did on Apple and its delays, in large part, was because of the US chip makers. Now that, of course, those US chip makers source their own parts from abroad. But is the answer really to onshore?
I think the answer has to be to diversify. So if you look over the past 30 or so years, we've effectively gone from producing a little bit over 1/3 of the chips to about 12% of the chips. And probably more alarming is the fact that I think it's almost 0% of the leading edge is produced here in the United States. You have spoken endlessly. I listened to the last segment in the prior show. It's about a single kink in the supply chain that can take the whole thing down. So right now you have a 50-cent chip that is holding up the completion of a vehicle for Ford or for Volkswagen Group. You have a PC needing a USB bus controller that, it could be a $1 part. And they can't get it. And so instead of being able to put product on the shelves, it's completely stopping production. So to add capacity, we have to de-risk. We've got balkanization risks. Taiwan has over 90% of leading edge. Korea is handling the rest. What if something happens? We can't have zero production here. And I know Intel, TSM, Samsung, Global Foundries are all planning fabs here, but it's 2 years, it's $10 billion to build these. And it's not going to instantaneously fix anything, nor the substrates and other parts and pieces that are required to increase chip production and yield.
And you were talking about the inflationary pressure that a consumer is under, having to go into a car store or and showroom and just paying up. If we onshore, our company is going to have to pay up. Is it going to be more expensive to get what was originally 50 cents, as you say, chip that's waiting to go into an auto?
Yes, there's no question about it. They're going to have to figure out how to, even right now, just to fix things short term, we're going to have to raise wages. They're the types of workers that go into these fabs. These are not low-end workers. These are high-level. These are people that are very well paid. I actually spoke in an event alongside IBM CEO Arvind Krishna this week, and we actually had this conversation because I listened to Lisa Su from AMD and Matt Murphy from Marvell, and a lot of people were throwing out a late 2022, and he actually came out and said he even thinks into 23 and 24 when this could continue to be a problem. And part of it's good. It's because this ongoing demand for digital transformation, this is in the enterprise, this is for software, and this is, of course, for consumer goods, like we talked about at the holiday. But this demand is going to put a lot of pressure on building more and more chips, and we're going to have to pay. But if you look at what it's costing right now, I believe it was Bloomberg even put out some of these numbers, but that $200 billion impact on the automotive industry, I would think those slightly higher wages could be offset by what was lost in just this single event. So going to everything just in time, we have to de-risk this because it's cost us way too much. So whatever we saved in the short term, we've definitely lost during this challenge that we've had over the past 2 years.
Dan, it's interesting that you're talking about how Best Buy and some companies are actually finding a way to benefit from this, charging their customers a little bit more, coming up with novel loyalty programs. What have you seen, what have you heard of in terms of the car makers, the people who need the chips, doing to try and incentivize those producers to give it to them first?
Yeah, so that's a really big challenge because changing process, even if you pay a little bit more, these fabs can't just flip from one process to another to start making more chips. And it goes back to a problem, and I don't want to spend too much time in the past, but when the pandemic was first coming to America, cancellations on orders started to emerge, and then other orders rose to the top. Different companies had a different ability to analyze the impact to the market. Some companies canceled, some companies slowed down production, and some actually poured on more when the opportunity rose. So the opportunity to just flip a process and say, hey, we're going to pay a little bit more is probably not going to be enough to expedite the production. So, as far as I see it, I think it's more about creativity. You talked about automakers. I mean, of course, we've heard from Elon Musk. He thinks he's got it under control. And I wouldn't put it past him that he does. But we've also seen and heard from the other automakers that they're shutting down plants again and they're running into major capacity issues.
We'll have to look ahead to all those Tesla numbers, Intel numbers next week. Dan Newman, really interesting. Thank you for Shuram Research founding partner and principal analyst there. Great insights. Meanwhile, tune in next week, as we're saying. We'll be anchoring live with Bloomberg TV. I'm going to be co-hosting with Romain Bostic from the Port of Long Beach for a supply chain pain special. We'll visit with a round of guests focusing on supply chain backlogs, the impact on freight and rail movement, truck shortages, all things union. That starts next Thursday, 2 p.m. in New York, right here on Bloomberg Television. Meanwhile, Amazon has appealed a record $865 million fine over the European Union's tough data protection rules. In July, regulators in Luxembourg ruled that the company violated rules through its processing of users' personal data. Amazon has denied there was any data breach. Coming up, with ransomware attacks on the rise, the need for cybersecurity services is more important than ever. After the break, we'll speak with the CEO of Israeli cyber startup Wiz, a company that's tripled its valuation to now $6 billion in its latest funding round. This is Bloomberg. 2021, well, it's been another extraordinary year for cybersecurity attacks. It's all according to a new report from the US Treasury, where it found ransomware attacks this year may exceed the entire last decade combined. Our next guest, well, he knows a thing or two about thwarting ransomware. Asaf Rappaport is Wiz co-founder, CEO, happened to have, sold your previous cloud security company over to Microsoft, now building a new one, Wiz, worth $6 billion, a new funding round. What exactly is Wiz doing?
Hey, Caroline. So actually, Wiz is on the mission to make, in a way, cloud less cloudy and more secure. Wiz helps company to actually everything that they are building and running in the cloud to make it secure. So basically to identify the most critical risk in AWS, Azure, GCP. That's basically our mission.
Okay, less cloudy, I love that. Talk to us about the threat levels that you're seeing. Where is it most intense? How are you really having to ensure that ransomware isn't penetrating through Wiz?
Yeah, definitely. We all love talking about like the unicorns of the cybersecurity that are uprising, and Wiz is a great example. But for any unicorn in the bright side, I would say that there is a dark unicorn in like ransomware valley in a way. So we do see a huge rise. Definitely, when companies rushed into the cloud, when you look at the security debt that they have in the cloud, that's a huge gap. And I think companies are really, really focused on that area right now.
Wow, ransomware valley, that sounds terrifying. Talk to us about the ways in which those unicorns are being built, the ways in which they're making their money, because for better or worse, crypto sort of got itself a bad name from perhaps being embroiled in ransomware and the ways in which they might be paid. But certainly the administration's been trying to focus in on this and ensuring that that's not just an easy way to go untracked. How are people managing to extort?
Look, it's definitely an unfair advantage that the attackers has today. And I think that we as a community, the cybersecurity, but also companies, that's what we're facing. And I think that one of the most challenging things that we have is we're seeing like nation actions. So, if you look about Russia versus Bank of America, for example, that's an unfair fight. And we as a community must face that.
How do you make it less fair? How do you make it less unfair? How do you make it more fair?
So I think, we have a solution about Wiz, but I truly think it's all about, people first and then process. So I think that's kind of the thing that we should focus. And I think that we as a community, if we work together, vendors and partners, and also the customers themselves, if we work together as a community, I think we can give back a fight in a way.
Through ethical hackers and the like? I know that that's something that you have in-house.
Yeah, so in a way, we're super proud. Microsoft just released like the 30 top researchers in the world, and 3 of them are wizards, part of the Wiz family. And definitely, ethical hacker is something that we're putting lots of effort. And again, ethical hacker is all about working with the companies, from the hacker side, from looking from the attacker side and helping helping like the cloud providers and the companies to build a better cloud and a safer cloud.
We're just, of course, looking at some of the funding that you've raised, a value of $6 billion. You've just raised $250 million in your latest round. Index Ventures in amongst them, Sequoia and the like. The money that you're putting to work, what will it be for?
Look, so again, the demand is huge. We already have 10% of the Fortune 500 and we're growing. So definitely we're putting more efforts in building the product. So R&D, that's lots of the investment, but also the go-to-market. So we're looking in other geographies like EMEA. And, after raising $600 million, we have also the ability to acquire. So inorganic growth is also on the table.
Asaf, great to have some time with you. Good luck on that inorganic and organic growth. Asaf Rappaport, Wiz co-founder and CEO. Meanwhile, coming up, Apple steps up its smart speaker game as it gets set to further challenge Amazon and Google in its competitive connected home market. All the details with our own Mark Gurman. And as we head to break, a reminder that tech earnings kick off next week. Yes, you do not want to miss it. Netflix Tuesday, Tesla, IBM Wednesday, the big one Thursday, Intel. We will get clearer snapshot of the current state of the chip shortage. And of course, we'll bring you all the numbers and the analysis as it happens. This is Bloomberg. Now, as we mentioned before the break, Tesla reporting third quarter earnings next Wednesday. And while it once was the clear leader in EVs, well, the market has since become flooded with competitors. Earlier, I spoke with Adam Jonas, head of global auto and shared mobility research for Morgan Stanley, about the future of Tesla's market share.
Say for the foreseeable future, demand is not the problem. We think every battery made will be sold. Every EV made and delivered and not recalled will be sold. And so I think that the market shares will do what they do. Tesla, I think, mathematically has to lose some share just when you have some companies going from selling 0 EVs to selling above 0, right? Just mathematically, the choice will push that down. I think there's room for now for everyone to say, look, if we make a good, compelling EV at a reasonable price, or even in some exclusive price brackets, we'll get it on the road. But that's just part of the battle. To win the war is, now that we have the installed base out there, what do we do with it, right? It's not just like having iPhones out there, it's the services and the apps and the ecosystems that are built on top of that real estate. And I think the companies, including the legacy companies, have an opportunity to think way beyond the unit times price. Probably ain't a great business, frankly. And to think monthly active user and ARPU and recurring software, high margin service revenue. That's the holy grail.
Interestingly, we've just had U.S. Commerce Secretary Gina Raimondo speaking at a virtual event, just talking about these supply chain disruptions. Temporary, she says, but then again, she also says it'll take some time to resolve. So make of that what you will. But talk to us about the administration and whether, they've put a lot of focus behind, well, the unionized car makers and indeed their push into EV and some of the infrastructure spend thereof. Is the administration going to be a support for this industry that you cover?
Yes, and I'd say a couple of things. It's great that the United States has what's forming a national policy for renewable transportation. That's fantastic, because for a while it was really it was kind of haphazard and up to the states. So that's good that we're in the game, because we're talking about national security here, right? If we're getting off oil and building a battery economy, and we don't have control of our own destiny, and to do it here in the U.S. in a renewable way, shame on us. I'm hopeful that we're aware of that right now. But at the same time, I think it's just ultimately technology. I think too much is made of government policy and looking to Washington, help us when it comes to the EV thing. It's just going to be the technology. It'll be Elon Musk and those that follow that will just make the price of acquisition and total cost of ownership of EV not slightly better than oil-powered cars, but like uncomparably better in every way.
Adam Jonas speaking to Romain Taylor and I a little bit earlier, head of global auto and shared mobility research for Morgan Stanley. Meanwhile, Apple is making moves to step up its challenge to Amazon and Google in the smart speaker market. The iPhone maker has hired a new engineer to lead the team that so far struggled to make its mark in the sector. For more on this and all things Apple, let's bring in Mark Gurman from Los Angeles, of course, all things Bloomberg News, and our resident Apple scooper. Talk to us about what this means in this hire. How significant do they need to make inroads into this market?
Apple scooper, I like to thank you for having me. I mean, the smart home ecosystem is a critical battleground in the larger consumer electronics industry. Like I think we've discussed in the past, and I like to say all the time, it only takes one crack in the ecosystem potentially for the whole thing to break apart, right? If Amazon starts being exposed to more Apple customers on the Echo side, on the smart speaker side, on the Fire TV side, right, they can encourage more people to leave the Apple ecosystem, not only for their better smart speakers on the Echoes, but maybe for their other products. Maybe they'll build another phone one day. The same goes for Google, right? If someone buys a Google Assistant or a Nest speaker through Google, right, they may really like that experience, learn more about the Google ecosystem, and then potentially buy the new Pixel 6 that's coming out next week. Right, so Apple needs the smart speaker to be up to snuff for its ecosystem in order to really retain those users for this critical category.
Talk to us about that ecosystem that we know through reporting such as yours has taken a hit in terms of the supply chain issues coming to bear, but they're still looking to unveil new products. How much is this going to be an issue with? And they're trying to design such new things, but they've got significant issues when it comes to the chip backlogs.
Yeah, in all my years covering Apple, I really haven't seen anything like this. So over the past month or so, they've announced several new products. They announced the new Apple Watch Series 7, which I have right here. They announced and that came out earlier today. They announced the iPhone 13 last month, the new iPads last month, and all of those devices, if you were to order them today, depending on the configuration you get, you're looking at a shipment and delivery time frame in about a month from now. Right, so mid-November to mid-December in some cases for the new watch, if you're getting one of the Hermes editions or one of the higher-end editions. Some of the Macs are facing substantial backlog as well, the iPad mini with that new display. And then on Monday, you're going to see the announcement of a new MacBook Pro. And a lot of people have been saving up, have been waiting to upgrade to this MacBook Pro because there has been a lot of anticipation for a high-end MacBook Pro with an Apple processor to replace Intel. Everyone has known it's coming. Now it's coming and people are ready to spend to buy it, and we have to see if Apple's going to have enough supply to meet that potentially very strong demand.
Luckily, you get an inside track when it comes to getting your watches a little bit earlier than some others. Mark Gurman, we thank you so much showing us the latest thing that he's got strapped to his wrist and indeed the latest hire coming from Apple. Meanwhile, coming up, diamonds, they're going digital. We're speaking with Diamond Standard, producer of the first exchange-traded, regulator-approved fungible diamond commodity. You got that? We'll dissect it and discuss about how they're basically putting gems on a blockchain. What does that mean for you in terms of trading? And a little bit later, we're speaking to the co-CEO of Minted on how she's grown her company from an attic side hustle to a digital design empire. We're going to go out back to Stanford with our colleagues Carol Massa, Tim Stevanovic, been there for the Bloomberg Business Week rankings, where Stanford has once again come up on top, talking to plenty of alumni, and Mariam Nafisi is going to be joining them. From New York, this is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. And let's get back to where the market was. Kriti Gupta, you've got to focus on crypto for us.
I do, Caroline. It was such a huge day when it comes to cryptocurrencies, Bitcoin in particular. Now the SEC saying it's poised to allow, in other words, it won't get in the way of a potential Bitcoin futures ETF. Caroline, take a look at what this did to the Bitcoin curve. Essentially, this is showing the premium over the spot price. Now, it works a little bit differently in Bitcoin, where in oil, we talk about how oil prices are in backwardation. Essentially, the spot price is more important, it's higher than the future price because people need oil right now. In Bitcoin, it works a little bit differently because of this inbuilt expectation that the future price is going to be higher anyway. So that's really what you're seeing here, that future premium ticking higher relative to the spot price. And while we're talking about those ETFs, Caroline, we do have some breaking news right now. ProShares signaling Bitcoin futures ETFs could launch as soon as Monday. It looks like it does actually have, at least for now, the SEC kind of taking a little bit of a step back, not trying to get in the way. Let's see how that plays out on Monday. For today in the market, that news actually showed up in a lot of those cryptocurrencies, including Riot, all the way to Coinbase, including Square. In fact, after hours, you had Jack Dorsey tweet out that Square might get involved with creating a Bitcoin mining network. Really crucial here. After hours, Square shares traded higher by almost 3% before pairing some of those gains. I want to show you what the biggest stock, though, with the most exposure to crypto is, and that's going to be MicroStrategy. Big shout out to our colleague Dave Wilson for pointing this out. Remember, we know MicroStrategy MicroStrategy has a massive investment in Bitcoin. Well, it turns out the gains that they made on that investment is equal to almost 50% of the company's market value. So if you do start to see some more action in that Bitcoin ETF and, of course, Bitcoin futures, MicroStrategy, Caroline, is one stock you might want to keep an eye on.
Certainly will. Kriti, thank you. And thanks for bringing us that breaking news as well. We're going to stick with all things crypto and indeed the blockchain that underlies it. Because, interestingly, we're starting to see blockchain used to trade diamonds. Can you trade diamonds as an actual commodity? Well, that's exactly what Bermuda-based Diamond Standard is currently looking to do. And it's the first exchange-traded, regulator-approved, fungible diamond commodity, along with their own crypto, Bitcarbon. And its sights now set on offering futures contracts and hopefully an ETF on the New York Stock Exchange. For more, I'm joined by Cormac Kinney, founder and CEO at Diamond Standard. So, I mean, where to start? So much news. You're raising money. You're thinking about, first and foremost, we're just coming off of news about crypto, so let's stick with crypto. Bitcarbon, what exactly does it do?
So Bitcarbon is a significant breakthrough in the world of cryptocurrencies. It's a currency that is based on the first blockchain native commodity, which is the Diamond Standard coin. That currency can be used just like Bitcoin, but it has a real asset behind it. And as such, it's basically macro hedged, that as a real asset, it's hedged against inflation.
Why do you need to therefore trade it on a blockchain?
Well, our commodity requires the blockchain because to prove that the commodity is fair and fungible, we need to store all of the provenance of the diamonds in a public format.
I see. And let's take a look at the diamonds that you're creating, because what's so interesting is, of course, people don't usually use diamonds as commodity because they're not exact. They're not all exactly the same. It's very hard to commoditize them, for want of a better word. But you found a way to do that. Just show us what you have.
That's exactly right. So what we built is the world's first fungible diamond commodity, and this is what it looks like. These are Diamond Standard coins, and the breakthrough is that each coin contains a regulator-approved equivalent grouping of diamonds, which means they have the same exact value. And this commodity has been approved already to asset-backed futures on the CME, for example. And inside each coin is a wireless computer chip that stores a blockchain token. So while this commodity sits in a vault, you and I can trade the token instantly, electronically, and globally.
How hard has it been to get the chips at the moment? Are you having any supply chain issues?
We have had a hard time getting the chips. Fortunately, we have reserved tens of thousands, so we do have enough supply. And also, fortunately, diamonds aren't really subject to the supply chain problems with ships, for example, because we ship all of our diamonds by air.
Okay, so air cargo. I'm interested in, whether these, when you're looking at the amount that you're coining, I mean, how many are there in existence at the moment? Will there be a limited supply? Will you continue to keep on making them?
Well, that's what's so interesting about diamonds. They're the forgotten commodity. The above ground value of diamonds is over 1.2 trillion, which is more than all the silver, platinum, palladium, and rhodium combined. But diamonds could never be used by investors because you could never mark them to market. They were all different. What we solved is how to make diamonds the same through a regulator-approved fungible commodity. And now we believe that investors will, for the first time, be able to acquire diamonds as a store of wealth, a hedge, or a speculative investment, and that diamonds will catch up with palladium, for example, and investors own 15% of all the world's palladium.
Is there any risk that diamonds go down in value? I mean, people are now being able to build diamonds to a certain degree.
Certainly. So we only use natural diamonds. And if you look at the last 17 years of returns, diamonds have been flat because they're at an equilibrium. The supply equals the demand. We are now introducing tremendous new demand from institutional investors for diamonds.
Tremendous. How do you measure the tremendous? How can you tell us about the demand that you've seen thus far?
Our current offering is 650 million, and the total production of diamonds per year is around 20 to 30 billion. So that's a significant slice for a first year of a new commodity.
And you've seen people, I mean, I know you're just announcing this now, but the institutional investors have been warm to it?
Absolutely. So we already have the partners for the ETF that you mentioned, which will be launching on the New York Stock Exchange upon approval.
And why do an ETF?
To make it accessible to consumers,
I see.
right? Consumers don't normally hold commodities, and they may not want to trade the token, which is a bit of an encumbrance. So by putting it into an ETF, we make it very accessible.
Where next for Diamond Standard? You're announcing this what you're raising. You're also, of course, got Big Carbon as this crypto stable coin, I suppose technically it is, the ETF. What's your hope? What's your dream?
Well, we've just entered an agreement with a firm called Horizon Kinetics, which is a $7 billion or so hedge fund. They operate several of the best performing mutual funds this year, according to Morningstar. And with them, we're launching a trust product that'll be listed on the OTC markets system. And that'll be the first trust, or first, not quite ETF, but for accredited investors, a fund that they can invest in. And for that, we already have $50 million committed. Amazing.
Cormac Kinney, Diamond Standard CEO. I mean, real expertise, background in investing. Used to run a lot of money for the likes of Millennium and under Portugal Jones as well. We thank you so much. Coming up, we'll take you live to Stanford for Bloomberg Business Week's focus on the best B schools. And we'll hear from one of their graduates, the founder and co-CEO of online art and design marketplace Minted. This is Bloomberg.
And we are back on Bloomberg Technology. Carol Master along with Tim Stanovic. We are on location in California at the Stanford Graduate School of Business, and we're now going to bring in one of the alum who's gotten her MBA here back in 1998. Miriam Nafisi is with us. She's, of course, the founder and co-CEO of Minted.com. Nice to have you here. We were talking earlier. What's it like to be back on campus?
It's a delight, and it's a walk down memory lane because in 1998 I was here starting my first business on campus. I was working on the side of my classes on a business plan, like many of the people you see around you right now are probably doing the same thing.
Yeah, it was funny. I was talking to one of the current students, and I asked her what you're going to do this summer for an internship, and she was like, "No, I'm actually working on a business right now already." So, yeah.
Well, let's talk about your business because you continue to grow and expand. What is it that guides you in terms of your choices? You've got digital art, you've of course got invitations, your wedding business, it's a big one. Yeah. You are moving into furniture. You just debuted a line this summer with West Elm. What is it that guides you, Miriam?
Well, I think the fundamental thread through all of these businesses is this idea that great talent can come from anywhere. Great ideas can come from anywhere. And so what we're trying to do is bring great, independent, unique art and design to people everywhere and empower artists around the globe to put their hat in the ring and then really build businesses off of our platform, regardless of where they were educated, where they're from, whether they had any connections to be able to get into business. This helps anyone really, be part of a marketplace.
What are you finding is the best way to communicate what you're doing and how you're growing? Because I do think a lot of people know Minted for invitations. I mean, full disclosure, it's what we use for, my wife and I use for our wedding, and I think people know it for holiday cards, but how do you then communicate that you're doing furniture as well?
Yeah, I think it's a great question. I mean, we are targeting niche audiences through niche marketing. So, you might not see it at the very highest level of corporate marketing, but we are marketing to different audiences. But I think also you'll see more brand building campaigns from us at the higher level this Christmas season, where we really are focusing on the artist as the common thread through all these businesses, so that I think people really understand that it's really about an artist marketplace and community that is participating across textiles, paper, furniture, wall art, many different goods, and but really centering it around the artist's story and their journey. And you'll see that coming out soon.
You are so great about highlighting other people's journeys and artists' journeys, but what about your own journey here? Because you didn't get accepted the first time around, but you came back the next year. How did you make that happen?
Yeah, I mean, I think it's this idea of being persistent and fighting for what your dream is. And, I had come into Stanford knowing I wanted to be an entrepreneur. I'd landed in California in 1993 after graduating from college. I'd spent some time at some other businesses in investment banking and consulting, and I knew that I wanted to carve my own path. I felt that if I'd gone more of the bigger corporate route, I wasn't sure if that was a good fit for me, or if I would be given the responsibility that I thought maybe in my 26-year-old mind I thought I maybe deserved. And so I really felt that the U.S. is, I'm an immigrant to the U.S. I felt like this is really a country of great opportunity, and that the American consumer would be the ultimate judge of merit, that they wouldn't really care necessarily who made the product. If they liked the product, they would buy the product. And so I was really motivated around entrepreneurship as a way to create the world I wanted to live in and create the products I wanted to see.
Have you found that to be the case about the American consumer?
I do think so. I mean, this is one of the best things about being American, is that we have this huge petri dish of like several hundred million consumers who can buy your product and test your product. So it's why we are so good at product development and marketing, actually, because we have a great petri dish. And so that's exactly what's happened. And that's why I wanted to pursue entrepreneurship and come to Stanford. So when I came out, I knew that that's what I wanted to do. Yeah.
So what's the end game? And it's a Bloomberg question. I mean, it's got to be nice being private but having investors involved, right? But I mean, is the ultimate goal to be a public company? How do you think about it? Because there are options today. I think it used to be, it was a direct path. You stayed private for a long time, but as soon as you could, you get to the public markets. It doesn't have to be that way. There's a lot of cash out there with investor support to keep a business going for years. We see that.
Yeah, I mean, I think we're always trying to keep all options open, but it is an independent company in the sense that our artists are independent too. It's a fungible community; people can come and go, and I think the idea of trying to capture that community inside another company is probably a little bit of it would be forced and kind of strange, probably.
Yeah.
So I think of ourselves as an independent business, that we're building an independent company, and certainly we could continue private financing or go public, and we're just preparing for either both paths. We always keep ourselves prepared for both.
We haven't raised money in a couple of years, since 2018.
Yeah.
But you are cash flow positive. What can you share with us? And all known that you're a private company.
Sure. Well, I can share that we're several $100 million in sales. We are cash flow positive. We are growing rapidly, and we haven't even begun to tap our international markets at all in terms of, consumer marketing or sales. So I think there's a lot of room ahead to grow.
Miriam, is that part of it, though, the international growth?
Yeah, because our community is actually now in 100 countries, and so our 100th country, I believe, was Kenya, and we are reaching every part of the globe now in terms of sourcing. So I think it makes sense that if we're sourcing all these different designs and aesthetics, why not provide those products to people locally as well? I think it makes a lot of sense. You could shop Minted Sweden or Minted France and have a completely different look to the Minted assortment.
And finally, just give us an idea of how you made it through the pandemic during wedding season when it completely just dried up.
Well, this is the kind of thing that I think, Stanford and getting a great education around frameworks and how to learn more quickly. I think at Stanford and the GSB teach you how to learn. You learn how to learn, if that makes sense.
Yeah.
And you learn how to learn really quickly. And the pandemic was a great example where things were literally changing by the day, and you had to reformulate your strategies both with regards to your employee base and your commercial activities by the day, by the week, and what really prepares you for that. So I would say we did have to quickly cut expenditures for a while because revenue dropped. We ended up cash flow positive anyway for the year, and we did really focus on different product lines that we thought people would find very popular. Home goods, for example, that's been booming.
Very quickly, weddings are back.
Weddings are back.
We just wanted to know.
Yeah, I've been to a few.
Miriam, thank you so much. Good luck. Really
Thank you so much for having me.
Miriam Nafisi of Minted. Back to you, Caroline.
Carol, Tim, thank you so much. Live from Stanford. Going to be joining them out there in LA next week. Meanwhile, let's take a look at some of the other headlines for US retail sales. Unexpectedly increased in September. Now, the value of overall purchases was up 0.7%. Coronavirus infections rose in August and September, curbing demand for services such as, travel, entertainment. So Americans, they shifted their spending towards merchandise. Meantime, it was the worst September for auto sales in Europe since 1995. New car registrations plunged 25% to less than 973,000. That's put the industry on track to do worse than last year's disastrous showing. The Automakers lobbying group largely attributes the drop to the semiconductor shortage. Coming up, we're going to be hearing from the CEO of digital lender Tala about the company's plans to expand mobile-first financial services for people in emerging markets. And a reminder that we'll be bringing you special coverage from the Milken Institute Global Conference in LA next week, kicking it off Monday with Siemens US CEO Barbara Humpton, plus Mark Atancio, Crescent Capital Managing Partner, Milwaukee Brewers owner, of course. We'll also speak to Dan Barkley, BMO Capital CEO. Don't want to miss it. This is Bloomberg. Let's take a look at a rather large number, 3 billion. It's a number of people around the world who are deemed financially underserved, and only 30% of the global population have some sort of formal credit record. One company hoping to alleviate this and bridge that divide is Tala. It's a fintech platform aimed at making financial services more accessible in the emerging markets. It's just raised $145 million in a Series E round. Earlier, I got to speak with Tala founder and CEO Shivani Saroya with my colleagues Romain Bostic and Quick Takes Jennifer Sabazaja. Take a listen.
This new funding round for us, I always think of it as it gives us the muscle to really be able to accelerate our roadmap in terms of delivering real value for our customers. So what we talk about internally is really around enabling financial agency for these 3 billion individuals globally that are currently underserved. And so what we're looking to do is really ensure that customers can save, they can protect their money, they can grow their money, and they can use their money in very efficient and cost-effective ways.
And Shivani, can you talk about how exactly you ensure that? I know part of that, part of what goes into that is the data that you collect. How are you ensuring that these consumers are credit worthy and are not, taking out more credit than they need to be?
We're always very responsible, and what we try to do is ensure that we're really focusing on healthy borrowing. And so we're always thinking about the individual's financial lives, their capacity, and also their likelihood to repay. So the kind of factors that we're bringing in allow us to understand the consistency of their bill payments, what their employment history is. We're also looking at their tenor with Tala and also their repayment rates historically with us. And so we really want to understand, how is this individual using credit within their financial lives? And ultimately, the goal that we have is around holistic financial products. And so that's really why we are really focusing on going beyond credit now and really focusing on the marriage between savings, payments, and credit.
So when you talk about, expand on that idea a little bit for us here, Shivani. When you talk about sort of marrying sort of the savings aspects and the other aspects here of finance, what I hear is a bank. Is this different than a bank? Do you provide something to these folks here that is not only going to be differentiated in terms of what they are able to get out of it, but also with regards to the regulatory issues that you're going to have to deal with, particularly with a lot of these cross-border issues?
You're totally right. And the way that we're thinking about this is more that we're partnering with existing financial institutions. What Tala has been able to do for the last over 6 years is actually build out a global platform so that we can actually deliver customized financial products to meet the needs of the underserved. And so in that sense, our expertise is really understanding the financial lives of these customers, taking those insights, and then building that into our platform. So thinking about how do we verify identity? Most emerging markets don't have national ID systems, so financial institutions can't meet their needs. Or thinking about how we actually deliver the actual credit products to them. And so we've directly integrated across multiple different payment layers. And so in that sense, we're truly interoperable. And so on our side, we focus on the technology and the product experience and the customer knowledge. And then we partner with others for the regulatory and the licensing side.
Shivani, how have you got into all of this yourself? It's like 6 million plus customers, as you say, born over 6 years. What made you see that in countries such as Kenya, Tanzania, India, the Philippines, they were being underserved, and you were the person to fix that?
It was a problem that I couldn't stop thinking about. I truly became, I think, obsessed with the idea that there are billions of individuals that are unable to access the formal financial system, and that there is purchasing power that is currently locked up. And so that potential isn't being seen by the marketplace. And so on my side, I saw that firsthand when I had the opportunity to work at the UN Population Fund. I worked across 9 different countries in West Africa, Sub-Saharan Africa, and India, and really got to understand at a very micro level, what are the kind of financial decisions that individuals make around their money? How do they think about hard money versus soft money? How do they think about what goes into the next day's working capital or which bills to prioritize? And by seeing all of those micro decisions, I could really see that there was daily life data that we could use to actually bring into our underwriting models. And so it was a hypothesis at that time, but a chance that I really felt like needed to be taken to solve this problem at a global scale. And I'm really excited to say that now we have scaled across these 4 different regions, and we've really proven that our credit models can work globally.
Shivani Soroya, Tala, founder and CEO. That does it from this edition of Bloomberg Technology. Stay with Bloomberg TV. My colleague David Weston is up next. Wall Street Week. I'm Caroline Hyde in New York. This is Bloomberg.